Hey guys, welcome back. If this is your first time here, I'm Neil, the Adventurous Investor. On this channel I talk all things investing, business, finance, personal finance, and anything of that sort of nature. Today I'm going to be talking about ethical investing, okay? Investing ethically. It's all the rave at the moment, everyone's doing it, and I'm going to be talking about investing ethically through ETFs, two ETFs, but both these are going to be Vanguard ETFs as well. Just a quick overview on both these ETFs, why I like them, and just a quick sort of overview on investing ethically. Quick disclaimer, like I've said in other videos, everything in this video is purely education, so take what you will from it. This is just my research, but definitely do your own research before you undertake any investment or get professional advice before you make any financial decisions. Anyway, let's crack into it. But before we jump into it, I'm just going to have a quick little overview on ethical investing, what exactly it is. Just because I know a lot of people are pretty keen on it, especially millennials. They want to know what they're doing with their money. They'd even prefer having less return on their money as long as they know that their money is getting invested ethically, okay? Which is great. It's real good to see some real pressure put on these big corporations to make sure that they're acting in an ethical and sustainable manner. I recently just completed a postgrad cert in business, and over those 4 units was a very core sort of focus on ethical investing. And just corporate sustainability and social responsibility of the big corporations. And it was good to see that it's really starting to be brought into the education system and the focus on sustainability. And I was doing a lot more sort of deeper analysis on companies and sort of looking at what they're actually reporting on and why they're reporting on it. A lot of obviously financial reports, they get pretty heavily scrutinized, audited by third parties and everything. Whereas when it comes to sustainability reporting, a lot of companies, you don't have to report on anything. A lot of these companies are doing it off their own back just because they want to. So then with that, then you've got to think, okay, why are they doing this? And who are they reporting to? Is it the shareholders? Is it to the stakeholders? Is it to the communities? Is it to the employees? Is it just to the directors? What is it? Why were they doing all this reporting? And a lot of companies, you'll find they'll generally say they're doing everything, they're saving the planet, and everything's all rosy. But then you've got to dig a little bit deeper to see if they're actually doing that, okay? It's all very well putting up a nice glossy picture and all these great shots of them saving the day and all that sort of thing, which is cool. It's good to do that as well, but you've got to dig a little bit deeper than that and actually see, are they doing that sort of stuff? There's been classic examples of companies where they've said they're doing everything great, and then you dig a little bit deeper and they definitely weren't. Volkswagen a few years back, there was a classic example where they were famous. Our Volkswagens, minimal emissions from our Volkswagens. Big scandal come out, they were cooking the books on the computer work there. So that was huge. Like, that was a big question mark around the ethical and the sustainable sides of Volkswagen. Also, Rip Curl a few years back as well. They were starting to outsource a lot of their production of their, I think it was the snowball jackets. And it was predominantly being done in China, but then another company in China was getting some done in North Korea or something along those lines, and just pretty much sweatshops by the sounds of things. So there's all these sort of different things you've got to sort of account for around the sustainability, and also the life cycle of certain things as well, especially in the shipping industry. Big ships, they have a life cycle maybe 25 years or so. What happens to the ship at the end of 25 years? Basically, from my studies were, a lot of these ships just end up, they pretty much beach them on the beaches in India, then they just have crews of Indians rock up and just start stripping this boat down. And we're talking oil and exposure to bloody asbestos and everything there, horrific working conditions. And guys getting killed daily almost and working in bare feet and just sludge and grease and oil. It'd be horrific working conditions. And they're just stripping it down and trying to get anything salvageable off these old boats. So you've got to look at the entire life cycle of whatever it is that you may be. So, how do you dispose of a big cargo ship or something like that? So there's a lot more to the ethical investing, more than everyone just, I want to invest ethically, but that's great. But I definitely recommend, if you want to do some more research, dig a little bit deeper and start reading over some sustainability reports. ETF we're talking about is a Vanguard fund. This is Vanguard's Ethical Conscious International Shares Index ETF, okay? VESG is the ticker symbol if you want to look it up. Both of these ETFs I'm talking about today, they both be traded on the ASX through any regular platform that you trade your stocks or ETFs through, so super easy to get in and out of. This has only been around for a couple of years. Inception was in 11th September 2018, so only new on the scene. They don't have 20 years of performance history to sort of look over and see how they're sort of tracking. But like I said, this is all international companies, so nothing in Australia. You get exposure to the rest of the world, bar Australia, okay? So bear that in mind. If you wanted to invest in Australian ethical companies, then listen to my next ETF. But the first one, this is all international, okay? One of the main reasons I like this ETF is the management fee, okay? Management fee is only 0.1%, okay? So just shy of that 0.2% there. Management fee, which is great. This is a good sort of management fee. It's an ethical management fee, let's say. Dividend yields are 1.79%, which is great. That gets paid quarterly, okay? You can either get this reinvested back into your ETF, back into your account, or you can just take the payment. It's a good way to keep gaining your position if you just keep getting those dividends reinvested, okay? So I recommend that, especially if this is something you don't need, you're not requiring an income off your portfolio, then you can just sort of invest your money, set up the dividend reinvestment plan, and it just keeps snowballing over time. So it's a great sort of hands-off way. You don't have to sort of monitor or anything like that. So it's a good way to diversify, and you're getting exposure to all the big companies in the world, Apple and Microsoft and Tesla and all these big tech giants, basically all the ethical companies out there. You're not getting any like fossil fuel, none of the BP or Woodside or any of these sort of companies, any nuclear, alcohol, drugs, tobacco, porn, all these sort of industries, gambling, none of those sort of industries. So you're not getting exposure to any of those sort of stocks. All purely ethical companies, okay? So that's my first one on the list. So number 2 on the ETF list today is another Vanguard fund. I'm a big fan of Vanguard. Anyway, this one is Vanguard's Ethical Conscious Australian Shares ETF. VETH is the ticker symbol. Can be bought and sold on any share trading platform, whatever you use. But that is at VETH. Another great option. Bear in mind, this is only fresh on the ETF market, okay? It's only big inception was on the 12th of October 2020, so we're only talking a couple of weeks ago. Couple of key things why I like the look of this fund is the management fee is only 0.16%, which is great. You know, if you're doing any of your own research, when you're looking at different ETFs and trying to analyze which ones to go with, I'd always look at that management fee. That's a good one to sort of say, okay, what are they, stinging me? What are they creaming off the top in fees, okay? And, 0.16, you're not going to get much better than that. Especially when it comes to the ethical. There seems to be a few companies out there, I don't want to mention any names, but they have all these ethical funds, but then their fees are a bit unethical. They're charging 1.5%, 2% fees, which is, come on. You're promoting an ethical fund, but then they're trying to skin you like 1 or 2%. So definitely look at that. But yeah, like I said, they've only just, it only started only a couple of weeks ago, so bear that in mind if you're wanting to go down this road. But with both these 2 different ETFs, you're getting good exposure to both international market and the local Australian market, okay? Dividend yield as well on this particular ETF, 3.43%, paid quarterly, just like the other ETF, and that can get fund back into your account or back into more ETF units as well with that particular ETF. And you're getting the exposure to the top 300 companies. You're not getting any exposure to any of the fossil fuels or gambling or porn or nuclear power or anything in that sort of nature. You're getting more exposure to the banks, so you're going to be pretty heavily exposed to the banks, Telstra, those sort of companies, okay? Bear in mind, though, you're only getting a 5% weighting on any one particular company, so they're not just going to load up 15% on ANZ or Westpac or anything like that. You're only ever going to get 5%. They cap it at 5% exposure on any one particular company, which is great. So you're not getting heavily loaded on one sector or anything. But then bear in mind, you might get 20% exposure to the banking sector, let's say, because you'll have ANZ, Westpac, NAB, Comm all in there, and they all might be sitting at 5%. So bear that in mind, but you're only going to get that 5% exposure to one particular company, which is good, So it's good to have that sort of diversification within your ETF, which is what you want when you're investing in ETFs as well. So both are good options, like I said, if you want a good global exposure to ethical companies. All right, guys, so that wraps up my 2 ethical ETFs here. Just a quick recap. So you've got VESG, gives you the international exposure, and the VETH gives you exposure to the Australian sort of companies. So with both those ETFs, you're getting a good exposure to the entire globe, basically, and everything's getting ethically invested, okay? But like I said, do your own research. There's also another great one, ethical ETF called Beta Shares. Ethy also gets a lot of mention out there in the world as well. At the moment, they've had a really great couple of years, getting some pretty solid returns. But the reason I didn't make the cut today was their fees are a bit higher. They're coming around that 0.59%, so a little bit high for my liking. I'd prefer the lowest fees I can sort of find when it comes to ETF investing. Especially we're looking long term, we're looking 10, 20, 30, 40 years for an ETF. If that's your sort of strategy and goal, you want to invest for the long term, then I definitely would try and find an ETF that has the lowest fees. But anyway, do your own research, guys. I'll leave the links down below to both those different ETFs. And if you enjoyed today's video, guys, hit that like button, be much appreciated. And if you want to see some more videos like this moving forward, then hit that subscribe button and we'll catch you guys in the next video. Cheers, guys. See ya.